Hello traders, welcome back again to the next video. So today, right away, I'm going to teach you about something very important. Okay, this was once one of my students' proposal to touch on the same. Okay, so sorry. Today, let me show you how to trade on a trending market. Okay, be it bearish or be it bullish. Okay, so every time when trading, considering a movement like this, let me draw it right here. Considering a movement like this, okay, like this, so this is a clear bullish price action. Okay, now when you want to trade a kind of a market like this, what do? Okay, so we all see that there is a break of structure to the upside, right? There is a break of structure continuously to the upside. So this shows you that this market is having a clear potential of upward movement. Okay, the moment it breaks or the moment it keeps breaking structures to the upside, that is a clear indication of a bullish momentum. Okay, that's a clear indication of a bullish momentum. And for a bearish movement, all right, it's just like the opposite of that one. So it's just gonna go like this, like this. Okay, this is a continuous break of structure to the downside. All right, it's a continuous break of structure to the downside. And why do I say that? Because every time you see there is a break of structure to the downside, it's a continuous break of structure to the downside. Okay, so this is a continuous break of structure to the downside, and this tells you that this is a bearish market. Okay, all right, so up to this we are together, right? Now, how about the entries? If you are expecting to trade in a continuous market like this, how do you trade, or how do you go about the making orders, okay, or having entries in the market? Okay, so I always say you wait for a break of structure. All right, that is number one. After a break of structure, you expect a pullback, okay, or a retracement. Okay, break of structure and a retracement. Now, where, and the question is, right, and the question is, sorry, okay, sorry, let me just clear that. So, and the question is, where do you enter from? Now that you have a clear bullish direction in this case right here, but you can just enter here or just right there or there or there or there. Okay, there is a specific point after a specific or after a particular price movement that you want to get involved in the movement. Okay, so like I said, identify the direction of the market, be it bullish or bearish. Ensure that there is a continuous break of structure to the same direction. If you want to enter, ensure that the price displaces above the previous swing, that is breaking the structure, displacing. Expect a retracement, right? This is a retracement. Do you see this? These are retracements. This one are retracements. So expect a retracement to an institutional reference point. Yes. Now the institutional reference point is a specific place or a specific point, a specific price point where you might get, you might really want to get involved. Okay, Now, after retracement, expect to see the price coming back to either a mitigation block, a breaker block, a fair value gap, or an order block, okay, or maybe a liquidity void, uh, an imbalance, okay. So expect to see price coming back to those points of interest, okay. Now, but before price coming back to those points of interest, there is one thing you have to keep in mind, okay. It's one thing you have to keep in mind. For example, if if this price was bullish, I'm expecting this retracement just here to retrace, okay. Where do I expect the price to retrace? What if I have a fair value gap right here and here? Of course, this downswing or this swing low, there must be an order block, all right, and a fair value gap and all those BD arrays, okay, that I mentioned earlier. Now, when you want to enter the market, when you want to really get involved, there is one thing you have to know. Because, for example, if there is a fair value gap here, okay, will you consider entering at this fair value gap, or assuming there is another fair value gap right here? Which will you choose? And assuming there is an order block right there, okay, and maybe right here, right here, right about there, maybe it is a mitigation block or a breaker block. So which will you choose? Now, let me delete this, okay. Which will you choose? And that is exactly where I bring in the idea of premium and discount. Did you get that? The idea of premium and discount, okay. Now, considering this swing high and this swing low. So that is my swing low. Let me just mark it right here. So that is the swing low and this is the swing high. So that is the swing high and this is my swing low, okay. Considering I want to get involved in a bullish price action anywhere in between this swing high and this swing low, where will I get involved? Bringing in the idea of premium and discount is key. It is very significant. It is very important. Why? If you want to buy this price at anywhere in between these highs, these swings, this swing high and this swing low, where is the premium? Where is the discount? Like we always say as traders, you buy low, you sell high. So if you want to buy at this point, you want to buy low where the price gets to the discount. All right. Now, how do I know that the price is in a discount or a premium? There is a Fibonacci tool. This is a fib retracement tool. I bring it right there and I adjust it like this. Okay. Let me put another color that is blue and let me adjust it a little bit. Okay. So this is a fib retracement tool. It's a Fibonacci. So this gives us the idea of premium and discount points. When you consider this high, this is the equilibrium of the swing. This 0.5 level is the equilibrium. It's the consequent encroachment of this swing. Okay, between this swing high and this swing low, this is the middle of it. Now, below this 0.5 zone, this level to 0, this is the discount. All right, this is the discount, and above 0.5 to 1, this is the premium. Okay, so if I want to buy this, I want to buy at a discount right here below this 0.5 level. I don't know if you are really getting that. If I want to buy this, let me repeat it again because it's very, very important. If you want to get profitable in the market, just follow this through. If you want to buy low, buy at the discount. If you want to sell, sell at the premium. But in this case, we were bullish. So we are looking forward to getting involved in the market uh, at the discount. Okay. Now, having this in mind, that is exactly the reason why I wouldn't pick a fair value gap above this 0.5 key zone. Even if I have a fair value gap right there, okay, let me remove this right there, okay, or right here. If I want to buy, I wouldn't I wouldn't look forward to getting involved in a fair value gap at the premium zone. If I want to buy, I would wait for the price to come below the 0.5 key zone, the 0.5 key level, or the consequent encroachment of this price swing high and swing low, then I would get involved at the discount. Now, so having that in mind, I would look at the BD arrays at the discount. For example, always the swing low as the order block. Those are the order blocks at the swing low. Order blocks at the swing lows. Those are always the order blocks. Order blocks, order blocks. Okay, so those are the order blocks at the swing lows. And after order block, you'd always see a fair value gap, all right, and a mitigation block. And mitigation block may be at almost the middle of it. Okay, so now considering these BD arrays, would you pick the the breakup block or the mitigation block or the fair value gap or the order block? I know what you think. It's at the discount. Yes, right. So you would consider the price to come to the discount. If in this case the mitigation block or the breakup block is in premium, you ignore it. Okay, you ignore that. Now focus on what is there at the discount. So be it a fair value gap or an order block. That is when you have to consider getting involved at the fair value gap or the order block or at the mitigation block if they are at the discount level. So you would wait for the price to tap into the fair value gap or the order block and you buy targeting the previous swing high. Okay, so that is very simple, but again, when the price taps into the fair value gap or the order block, that is when you have to go into a lower time frame to wait for the normal thing that I always said, wait for the market structure shift or change of character. They mean the same thing. Okay, so you wait for that on a lower time frame, maybe 5 minutes or maybe 1 minute. Okay, and that is when you want to get involved and put your stop loss at the right place. Now, before wasting a lot of time, let me go to the charts. So I'm using DXY right here. This is DXY. Now, okay, exactly. Considering this bullish market, okay, this is a bullish market. So like this, you can see that this has been bullish. Okay, now having the first bias that the first argument that this is bullish, where do you buy, where do you sell? Okay, let's begin right here. This price really pushed high. Let's begin right here. Pushed down, high. Okay, and look what happened. Considering this swing, let me just explain it very, very clearly. Considering this swing high right there, that is my swing high. That is my swing high, guys. So that is my swing high. And my previous swing low is this one. Okay, this is my swing. That is my swing low. After a break of structure right here, right there, after a small break of structure right there, and you can see the price left a lot of fair value gaps and imbalances right here. So what do I expect if I want to continue buying now that I have a bullish argument? Okay, what do? I wait for retracement. Exactly like I said, there is a fair value gap right here. Okay, that is a fair value gap. There is another fair value gap right there. Okay, and there is another fair value gap right there. And lastly, there is a order block. Let me just shade it differently. This is an order block. Okay, so that is an order block. Now, having this in your chart, what do? Because if you want to say you want to enter at this fair value cap, where it is at the premium, and you want to buy. You don't want to buy when it is expensive. You want to buy when it is cheap. So wait for the price to come to the discount. So you wait for the price to tap into a point of interest at the discount zone. In this case, I don't want to guess. So let me just pick my tool. Let me just pick the fee retracement tool, just right there. I place it right there. Okay. Let me shade it. Let me shade it with my right color. Let me shade it red. Okay. Now, considering this, considering this, exactly like I said, this is the consequent encroachment of this swing. Okay, this is the 0.5 is the middle point of this swing. So whatever is above here is at a premium. Whatever is below here, below this 0.5 is at the discount. So I want to ignore everything at the premium. I wouldn't even mark it. I just want to ignore everything at the premium. Okay. When you see this now, when you see this gap, it's almost it's almost uh, it's almost confusing. Okay. When you see this gap, it is at the premium, and it is at the part of it is premium, part of it is discount. So it's really kind of confusing a little bit, but if it is confusing, you go for that fair value gap, that is that the whole of it is at the discount. So I would ignore that one again. Okay, because part of it is premium, part of it is discount. So I would ignore that again. Which will I choose? This one right here. So I would expect a change in price movement at this fair value gap, at the discount completely, or at this order block at the discount completely. Okay, and what happened? If you can see, you see the price tapped into the fair value gap right here at the discount level and started buying. You see, and started buying like this. So it is very, very simple. It is very okay. So you see, after a break of structure, every break of structure there is a retracement. Okay, so that is another break of structure right there. That is a break of structure. Just to give you more examples to see how this really works. Okay, when this structure was broken, the price came back to an order block at the discount zone. Okay, it didn't really go back at this fair value cap because it was a premium, if we can really confirm that. So that was a fair value cap at the premium. Okay, so anything that was below the premium that was at the discount was this fair value cap and this order block. Okay, this fair value cap right there and this order block, and that is why the price came back to the discount before proceeding high. Okay, so all this, if you really want to check, it happens. This is how price really goes. Okay, it's just a pricing rebalancing, and so forth. But consider the bullish momentum, look for discounts. If you are considering the bearish momentum, look for the premium. Okay, it's just the opposite of this bullish scenario. Okay, it happens like that all the time, all the time. I can see another example right here. Okay, this is another example. It's very, very simple to see this. Okay, when you see that, that was a break of structure right there. That was a break of structure, or you can consider this as a break of structure as well. This one, you can consider this as a break of structure as well. Okay, so this is another break of structure. It depends on really how you, it depends on how you understand this. Okay, so this is another break of structure for me, and so if I have to trade upwards continuously, I would expect between this swing high, okay, and this swing low right here, I would expect the price to come back to the discount of it, the discount of this swing, and the discount of that swing is this fair value gap, this fair value gap. Okay, that fair value gap overlapping with another fair value gap, so that increases our confluence, and this order block as well. Okay, and if we can confirm that, we put our retracement tool to that high, to this low, and you can see this the midpoint, and anything below the midpoint is the discount. So consider the institutional reference point at the discount before going up. Okay, so if you are to go high or go long, sorry, from this point, you would enter at the tip of the fair value gap or at the middle of it. Okay, just place a stop loss below that swing, just there, just to give the price some room to breathe and target the most or the recent high right there. Okay, so guys, that is it for today. Thank you for watching, and in the description below there is a link of my Telegram channel. You can consider joining the Telegram group. that I give out daily signals. Okay, the daily signals for currencies, majors, gold, and other assets. So look into the description below, and there is a link of those platforms. There is my Instagram link, there is a Telegram link, and all my social media platforms. So consider following and consider staying tuned for more, because the more you really follow, the more you learn, and more is coming. Okay, so stick to this, go back testing, and this applies to every uh, forex pair or every asset that you trade. Okay, so thank you for watching, and I hope you've really learned something. And please subscribe. Let's keep growing. Share the link. May other people join. May other people get to learn from this. And until we meet again next time, when I'll post another video. Thank you. Thank you.